Hello and a warm welcome to this week's edition of FMR Finance Weekly, specially curated for our esteemed NRI viewers. I am excited to have you join us as we conclude our insightful three-part video series, Navigating Business Setup in India, a guide for NRIs. If you have been following this series, you have already explored the different entity structures in India in our first video and learned about the essential registrations needed to run a business in the second video. Just in case you have missed watching any of the earlier videos in this segment, I would highly recommend that you do watch the same. We have provided very important information that may be crucial for your business operations in India. Now, in this third and final video, we are diving into the compliance requirements that each of these entity structures must follow to stay on the right side of the law. Whether you are managing a proprietorship, partnership, LLP, or a private limited company, understanding these compliance obligations is crucial. Let's jump in and ensure your business is set up for a long-term success. I am Chaitanya Garg, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.
Let's begin with the compliance requirement for first entity structure. This is for someone running a proprietorship business in India. Well, it's essential to stay on top of your compliance requirements to keep everything smooth and legally sound. Now, you might be thinking, wasn't it easier than other business structures like companies or LLPs? You are right. While a proprietorship does have fewer compliance obligations, there are still some key annual tasks you shouldn't overlook. Let's walk through them, shall we? First one, income tax return. Every year, as a proprietor, you need to file your income tax return with the income tax department. This isn't just about ticking a box, it's about reporting all the income your business earned along with any other source of income you might have. Imagine it as your business annual report card. Keeping everything in order can save you from future headaches. Second, goods and service tax, GST returns. Is your business registered under GST? Then filing regular GST returns is a must. Depending on your business turnover and nature, you will be dealing with forms like GSTR 3B, GSTR 1, and the annual return reconciliation forms GSTR 9, 9C. It might sound like a lot, but think of it as a routine checkup for your business health. Accurate records of sales, purchase, and input tax credits will make this process a breeze. Third one, tax deducted at source, that's TDS. If your business falls under TDS provisions, here's a question for you. Are you deducting TDS from payments to vendors, contractors, etc. as per the prescribed rates? And just as crucial, are you depositing it with the government on time? Filing TDS returns Form 26Q or 27Q is another step in ensuring everything's in line. Now, fourth, maintenance of books of accounts. Here's where the real story of your business is written, your books of accounts. As a proprietor, it's your responsibility to keep detailed records of all financial transactions. Think of it as your business diary, documenting every sale, purchase, expense, and even those crumpled up bank statements. By maintaining these records according to the accounting standards, you are not just following the rules, you are setting up your business for success. Fifth one, compliance with other applicable laws. Does your business fall under specific regulations like the Shops and Establishment Act, labor laws, or environmental laws? Depending on what you do, there might be extra compliance tasks to be handled. It's like customizing your car. Getting the specifics right is crucial for a smooth ride. Finally, don't hesitate to consult with our FMR expert. They can be your guide, ensuring that you are not only meeting all these obligations, but doing so in a way that's timely and accurate. After all, wouldn't it be nice to have an expert navigate you through this compliance maze? Now let's dive into the world of partnership firm compliance. Running a partnership business in India can be incredibly rewarding, but it also comes with its fair share of responsibilities. Staying compliant with legal and regulatory requirements isn't just about ticking off boxes. It's about ensuring your partnership runs smoothly and steers clear of penalties and legal hassles. Ready to explore what's needed? Let's go. First up, income tax returns. Just like with a proprietorship firm, partnership firm needs to file an annual income tax return with the income tax department. But here's the twist. It's not just about reporting your business income. You need to accurately calculate and report the partnership's income, deductions, and any profits or losses. Think of it as taking a snapshot of your partnership's financial health for the year. And don't forget, proper accounting records like profit and loss statements and balance sheets are your best allies here. Second, goods and service tax. Ever wondered if your partnership should be registered under GST? If your annual turnover exceeds the threshold limit specified in the GST regulations, the answer is definite yes. Once registered, complying with GST requirements is key. This means timely filing of GST returns, paying the taxes owed, and keeping meticulous records of your sales, purchase, and input tax credit. It might sound like a lot, but staying organized here can really pay off. Third, accounting and auditing. Keeping proper books of account isn't just a formality, it's the foundation of a strong partnership. Depending on your turnover, your partnership might also need to undergo an annual audit. Imagine this as a thorough financial checkup, ensuring everything is in order. If an audit is required, your financial statements will need to be prepared and signed off by a qualified chartered accountant. This step ensures that your partnership finances are transparent and accurate, key ingredients for success. Fourth, annual meeting. Here's a little tip. While partnerships aren't legally required to hold an annual meetings, it's a fantastic idea to do so anyway. Regular partner meetings are the perfect opportunity to discuss the partnership's affairs, review financials, and plan for the futures. It's like a family gathering, only here you are reviewing the performance, resolving issues, and making crucial decisions together. Finally, if all this seems like a lot to handle, don't worry. Consulting with a FMR expert can make all the difference. They can guide as well as undertake assignments of all your specific compliance obligations and ensure everything is handled accurately and on time. Wouldn't it be reassuring to know you have got an expert in your corner? Now let's talk about limited liability partnerships, LLPs, and an all-important compliance task that keeps them running smoothly in India. If you are managing an LLP, you already know it's a unique blend of a partnership and a company, offering flexibility with the added protection of limited liability. But with these perks comes certain responsibilities. So what does staying compliant mean for your LLP? Let's break it down. First, annual return filing, Form 11. Picture this. It's the end of the financial year and it's time to summarize your LLP's activities. That's what annual return Form 11 is all about. Every LLP must file this form with the Registrar of Companies within due timelines at the end of financial year. It's a snapshot of your LLP's partner details and other key information. Missing this deadline? Not an option. It could lead to hefty fines. So make sure it's on your to-do list. Second, Statement of Accounts and Solvency, Form 8. Your LLP's financial health matters, and that's where the Statement of Accounts and Solvency, Form 8, comes in. Filed annually with the ROC, this document confirms that your LLP is solvent and provides an overview of its financial position, including assets, liabilities, and a profit and loss statement. Think of it as a fitness report for your business. You have got to file it within 30 days from the end of 6 months of the financial year, so mark your calendars accordingly. Third, income tax return. Tax season isn't just for individuals. Your LLP needs to file an income tax return too. The process is quite similar to what other business entities go through. You will need to report your LLP's income, deductions, and profits or losses to the income tax department. If your LLP's turnover exceeds a certain limit, you will also need to get your accounts audited. It's all about keeping your financials in check and making sure your business complies with the tax laws. Fourth, GST compliance. If your LLP is registered under GST, and it should be if your turnover exceeds the threshold, then filing GST returns is a regular affair. This involves submitting forms like GSTR 1, GSTR 3B, and the annual return GSTR 9. You'll also need to maintain detailed records of sales, purchase, and input tax credit. It's a bit like keeping a diary of your transactions. Staying consistent and accurate will save you a lot of trouble down the road. Fifth, partner meetings and minutes. While LLPs don't have to hold AGMs like companies, it's still wise to have regular partner meetings. These meetings are your chance to discuss your business performance, make important decisions, and plan for the future. Make sure to record the minutes of these meetings. It's a good practice that can come in handy if there's ever a dispute or legal issue. Finally, if all these compliance requirements seem like a lot to juggle, remember that you don't have to do it alone. Consulting with a FMR professional like a chartered accountant or a business advisor can help you navigate these responsibilities with ease. They will ensure you are not only meeting your obligations but doing so in a way that keeps your LLP on the right track. Section 8 companies. Now let's dive into the essentials of running a Section 8 companies. These companies are designed for promoting charitable activities, but with that mission comes specific compliance requirements. Let's break down the key ones. First one, annual return filing, Form MGT7. Every Section 8 company must file an annual return with the Registrar of Companies within 60 days of the AGM. This form captures vital details about your company's structure and management. Think of it as your yearly report card. Keeping it updated ensures your company stays in good standing and avoid penalties. Second, financial statements, Form AOC 4. Your company's financial health is critical. You need to file your financial statements including the balance sheet and the profit and loss account within 30 days of the AGM. This transparency shows how funds are managed for your charitable goals, maintaining trust with the donors and stakeholders. Third, ITRs. Even non-profit organizations need to file an annual income tax return. If your company meets certain conditions, it could be eligible for tax exemptions. Accurately reporting income and expenditure is key to maintaining these benefits and demonstrating financial responsibilities. Fourth, GST compliance if applicable. If your company's activities attract GST, ensure you are registered and filing regular GST returns. Proper record keeping and compliance here are as important as in any for-profit business. Fifth, annual general meetings. The AGM is where you present financials, review progress, and plan for the future. It's also when you officially adopt financial statements. Holding this meeting is like your company's annual checkup, ensuring everything is on track. Managing compliance for a Section 8 company can be complex, but consulting and engaging with FMR professional can be a game changer. We will help ensure your company remains compliant while you focus on your mission. Having that support can make all the difference as you work towards your charitable goals. Now let's shift gears to the responsibilities of running a private limited company, and it's time to dive into the specific compliance obligation that comes with this business structure. As one of the most popular choices for business in India, a private limited company offers many advantages, but it also demands diligent attention to regulatory requirements. Let's explore the key areas where compliance is crucial. First, annual return filing, Form MGT7. Every private limited company must file an annual return form with the Registrar of Companies (ROC) within 60 days of its AGM. This form details the company's structure, management, and shareholder information. Think of it as your company's yearly status report. Keeping it updated is crucial to avoid penalties and maintain good standing. Second, financial statements, Form AOC 4. Your financial statements, including the balance sheet, profit and loss account, and cash flow statement, must be filed with the ROC within 30 days of the AGM. These documents provide a clear picture of your company's financial health, and filing them on time is key to staying compliant and transparent. Third, income tax return. Like any business, your private limited company is required to file an annual income tax return. This involves accurately reporting your company's income, deductions, and profit or losses. If your company's turnover exceeds a certain limit, you will also need to have your accounts audited. Filing your ITR on time helps you avoid penalties and keep your financials in order. Fourth, goods and service tax compliance. If your company is registered under GST, regular compliance is essential. This includes filing GST returns like GSTR 1, GSTR 3B, and the annual return GSTR 9. Maintaining accurate records of sales, purchase, and input tax credit is crucial for smooth GST compliance. Fifth, board meeting and minutes. Private limited companies are required to hold a minimum of 4 board meetings every year, with at least 1 meeting in each quarter. Keeping minutes of these meetings is not just good practice, but it's a legal requirement. These meetings are essential for making key decisions and ensuring the company's smooth operation. Sixth, maintaining statutory registers and records. Your company needs to maintain statutory registers such as Register of Members, Register of Directors, and minutes of board and general meetings. These records are vital for legal compliance and corporate governance. Managing all these compliance requirements can seem overwhelming, but you don't have to do it alone. Engage FMR professional now who can help you navigate these responsibilities, ensuring your company stays compliant while you focus on growth and innovation. Having expert support can make all the difference in keeping your private limited company on the right track. And there you have it, the complete guide to the compliance requirements for different entity structures in India. With this final video, you now have a comprehensive understanding of how to choose the right entity structure, secure the necessary registrations, and maintain compliance. Remember, staying compliant not only keeps your business legally sound, but also sets the stage for growth and success. If you need any assistance with navigating these responsibilities, don't hesitate to reach out to our FMR professionals. Thanks for joining us in this series, and I hope you found these videos insightful. I would request you to like, share, and subscribe to our YouTube channel, File My Return. I am Chaitanya Garg, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.